Yeah.
Hello, welcome back to this exciting edition of the Exponential Exit. Now, we have now reached part three, and the title of this edition is about private markets and public ambitions. First of all, I would like to thank all the people who have really subscribed to the YouTube channel. Now it's 43,000 of you, and I can only thank you for all the feedback you've given us. And we will continue to publish more and more video, more and more podcasts. Please feel free to write your comments and like below. You will find also the link to the newsletter which started in January 2025. Again, don't forget, we do not deliver information, we deliver transformation. And this is why today I got James Hunt again joining me. Hi, James, how are you?
Hello, I'm very well, Matteo, here in very sunny Pembrokeshire.
Okay, that's great. It's good with the weather. Yes, it's been quite hot in quite a few places. Now, as I said before in part one and part two, James Hunt is a private market expert. Private markets are massive opportunities for many companies to access capital markets. Now, we tend to hear on TV, watch about all the most famous companies in the world, and what we tend to think, what many people tend to think, is that capital market activity is not accessible to small businesses. That's what we're trying to change here. That's what we're trying to transform. It's a $14 trillion opportunity. That's how big it is all over the world. Now, let's come now to part three with James. Let's discuss today about the highly motivational employee share schemes. Okay. Now, the first question I wanted to ask James. Now, what are the problems associated with employee share scheme, and what problems should they resolve? What are they intended to address in a few words, James?
Yeah, I think the starting point with most entrepreneurs is they're worried about people leaving, and they're also concerned to motivate them. And I had an incident back in the office a good 10 years ago where someone came to see me, and we were talking about share schemes, and then right at the end, he mentioned he was concerned that a key employee was about to leave. And it suddenly dawned on me that although he mentioned that right at the end, it was the thing that most worried him and made him anxious. And so what we were able to do for him was to design a very motivational share scheme, which was based on his exit, the founder's exit, by selling the company to that individual and a team that the founder would help that individual grow. So it was interesting how it came about. It was sort of, right, how do I lock in this employee so he won't go? Because I've now trained him over the last 10 years. How do I motivate him to grow the business to an exit? So I think that those are the key problems. It's how do I motivate people and how do I lock them in so they don't leave?
Yeah, I mean, this is such a common problem that we see
Yeah.
with founders. Um, Again, the exponential blueprint is about transformation. Yeah. Now, there was an edition we published recently about NVIDIA, which is a major example of how businesses can exponentially grow and at the same time making the employee not just someone who works for the company and get a salary.
Yeah.
Now, I often talk about producers, consumers, this type of culture that we have in our society. What's your take on this? Why are we educated that even the founders of the company, they don't tend to think of the employees as if they can also become part of the production machine. What's your take on that, James? And also,
Yeah. So it's a terrible us and them, isn't it? I was lucky enough to have a father who ran a small business. And I used to go and work with him occasionally, work experience.
Mhm.
And there's nothing like seeing enterprise in action. My father would answer the phone. Hello, Cerdix Limited. And they'd ask, and he'd, oh, I'll put you through to service. And then he'd be sort of, so it's all about understanding the tricks of the trade. How do you make yourself seem bigger? How do you think bigger? How do you make yourself seem bigger than you are? And then the basics of bookkeeping. So unless you introduce people to the challenges of running a business, then it's quite daunting. And so all of the things that go into running a successful business are very challenging. And we don't teach it. So you end up starting your own business and learning on the job. And after about 20, 25 years, you've made so many mistakes. The question is, are you still alive and fighting? So if we can be clever, we can introduce ecosystems and frameworks where we can support really good entrepreneurs to grow their business, to transform their business with our support. I think it's really, really important.
And when we think about the size of the opportunity, obviously not every business in the world will adopt an employee share scheme. But let's think about this. In the world, we have about 8 billion people who depend on salaries on
Yeah.
effectively working for someone else. Now, when we look at the most successful companies in the world, we will find that many of them have adopted employee share scheme. Now,
Yeah.
personally, in my career, I've been in employee share scheme situation. So those were the most successfully productive companies. So this is a message for you founders. I do write a lot about this, and the key
Yeah.
message is sometimes it's let go or stay small, and that's unfortunately a reality. So I wonder if that what's your take about this with Asset Match as well? Because it's
To
not
let
just about
go,
employee, yeah.
create more.
Mhm.
Did you say, Matteo, to let go and create more? Yeah. So lots of people do have a controlling mindset, but actually, with the right legal framework, you can release equity to people on the basis that you can easily have it back at a pre-agreed price or a modest price if things don't work out and they leave. So it's all about taking really good professional advice. I think your next question is about why do share schemes fail? So I think that
Yeah, I
that's
mean,
a
this is where I wanted to introduce the next question is,
yeah.
yeah, trying to resolve the reason. I mean, obviously, when they're implemented, obviously, which is when the decision has been made by the by the founders, uh, say after obviously we have this change of mindset and things that seem to go well, then why do they fail in the first place? I wanted to get your
Right.
expert opinion on that,
Right. So,
James.
so I would say they fail because they're badly designed. And one of the reasons they're badly designed is the people designing them don't really understand the challenges affecting the founder and their motivation. So you've got to get inside the head of the founder, and you've got to create something that will be highly motivational for the founder first and foremost, and then for the employed team. And then it has to be communicated in a really powerful way. So unless you're clear what the founder wants and where he wants to get to, you can't excite the employees. So what I've had as a lawyer, I used to get quite a lot of people coming to me through our website. They were employees who were being offered a share scheme. And they'd come to me and say, "Well, I don't believe the value that's been put forward, and I'm not happy with it because the whole thing was just the opposite of motivational. So it was a really badly designed scheme." And the really critical point is this: there's no point having a bit of paper, which is your share option agreement, or a share certificate even, if you can see no realistic way in which that's going to be translated into money, which is then wealth. So a bit of paper that's a share option or a bit of paper that's a share certificate, it might be indicative of value, but it isn't wealth. So how is that wealth going to be created? And it depends upon having a vision for exit for the founder. And unless there is that vision for exit, it all falls down. So when I started practicing as a young lawyer, the most ambitious entrepreneurs always wanted to list their company. And the London Stock Exchange introduced in the early 1980s the unlisted securities market,
Mhm.
which became the alternative investment market AIM. AIM is now failing. From 1,700 companies, it's now down to 700. So there's something fundamentally wrong. So when business owners now are thinking, right, um, I'm giving you this share incentive. Well, what is the exit? So if you say, right, the exit is a trade sale, that might potentially be motivational for the founder. Right, I'm going to sell my company for £10 million. I'm then going to go and retire and enjoy lots of holidays in the Bahamas or what have you. But think of it from the employee's point of view. Suddenly, they've got a modest sum of money. They're now working for a company with a completely different culture. They might be out of their job. That's what worries them most. Unless you can really align the interests of the owner with the team. And this is what we did. Perhaps we'll do a series on this later, Matteo. We did a methodology which we called the BOSS, the Business Owner Succession Strategy. And it was underpinned by the idea that the owner would exit by selling his company to his management team out of the future cash flow. So that example I gave of the guy, Steve, who came to my office worried about his employee leaving, we created a share scheme which anticipated that within 3 to 5 years, Sam, the name of the employee, would lead a management buyout, and that was how Steve would get the money to retire. So that was the exit, which then made it motivational. And then we did say, and of course, if it's appropriate and you agreed you don't want to lead a buyout, we could together do a trade sale, but then they would be participating in the process and getting the share proceeds. But we'll come on to talk more in detail in a later podcast about how Asset Match can be this method for transformational change, because it is then the equivalent of a public market, but not with the scrutiny and the prescriptive rules that would otherwise be the case. So I think it's going to be an ideal way for the most ambitious owners to see how they can change their business, how they can grow it, how they can introduce highly motivational share schemes, because you will be encouraging your key employees to exercise their options in a tax efficient way so they have cash that they can use to pay off their mortgage or to educate their children or to extend the house or whatever they want to do. So you're helping them build wealth.
Yeah, one of the great consideration that we can make here is that when we see share schemes sometimes, we see too much theory and not enough practice.
Yeah.
When we spoke about PISCES, for example, and the vision from Asset Match, there's clearly there an opportunity to make this so much more tangible. Because one thing is to say, well, you got some share scheme or some share option or share allocated in the future, and then who knows what the valuation is going to be in future. One thing is instead to have a system where there's always a feedback from the market about the value of those shares. So that's where I see the biggest breakthrough with Asset Match and PISCES. What's your take on that, James?
Yeah, so the great thing about Asset Match, who have applied to become a Pisces operator, the great thing is that instead of having continuous share trading, which you have on a public market, what they will have is periodic, intermittent trading. So that means that the pressure is less acute on you as the owner. So you could say, right, we will have a window every month, every 6 months, every 12 months. And that could fit in with the cycle of the publication of your annual report and accounts or your half yearly report and accounts if you want to go that far. So it then is a lighter regime, which means the owner doesn't have to be distracted from the real challenge of growing the business. Because interacting with investors, potential investors, can soak up a huge amount of time. So you don't want to put too much of a burden on the growing business. So it's a wonderful compromise, I think, to keep as a private company, have periodic trading in your shares. It gives you the opportunity as an entrepreneur to learn how to communicate effectively with the market, to manage expectations, and in doing so, to educate your key employees, to get them excited about the growth path, to get them excited about wealth creation through the exercise of their options. So imagine you've got a share option and you're told, right, here's this bit of paper, and in order to acquire the shares, you've got to pay £100,000. Where are you going to get the £100,000 from? The answer is often the only way to get it is to sell some of the option shares um, in order to acquire the shares. So in the old days, we used to talk about back to backing if you had a company that was listed. So you'd have the option and you might have a short-term facility, but you would be selling the shares in anticipation of being able to pay the exercise price, perhaps selling some additional shares. You've then got shares that carry a dividend or that you can sell on the market. But it's critically important that the whole framework works from a financial point of view with the intention that people understand the process of wealth creation rather than being the consumers, Mario, that you rightly say we've got too many of the world's population have become. And it didn't used to be that way, of course. If you went back before the Industrial Revolution, there was thriving enterprise. It just wasn't organized as companies and big corporations. So it was very entrepreneurial, just different. So I think we have to rebalance and get back to that exciting world where people are much more independent in their thinking and they're not consumers because they understand about life and how wealth is created.
Yeah, this is so revolutionary because in just one potential solution, we have really feedback on the valuation of the business. Then
Yeah,
we have offer of ownership of the company to employees,
yeah,
feedback from the private market about the value of the shares, which then becomes tangible because, let's say, if I own shares in a company and I was told, let's say 1 year ago, that the valuation was £5 million, then last week somebody did a transaction with a valuation of £10 million. There you go. As an employee, as a business owner, I can see tangibly that someone has paid the equivalent of say, £10 million valuation for the business, while last year it was 5 million.
yeah.
So this is really the revolution that we're looking to achieve and the transformation that James, you and Asset Match can actually bring to the table effectively.
That's right. And then if I could just add a little caveat, a cautionary note. So, what do they say? Past performance isn't necessarily indicative of current performance. So, your share price might go up dramatically and then it collapses.
Of
So, I think
course, yeah.
the key thing is to understand, particularly in this rapidly changing world with AI, the key thing is to understand the market in which you're operating
hmm
and how you're positioning yourself to best exploit that market opportunity. So this is where I think what an asset match trading facility can do is focus the mind on of the entrepreneur in working with a team of professionals who can support them. So who is going to help them think through their growth strategy and their exit strategy? Who's going to help them understand the way the markets are changing? And how will that be communicated? Because if you are clever at understanding as best you can the future and positioning yourself to respond to that, you will bring the investors with you. I remember there was a very charismatic client of Clifford Turner where I started my career. Michael Green was his name. And I shared a room with a lovely lawyer, Mike Francis. And Mike was Michael Green's lawyer, and he used to say that Michael Green, who grew a very large listed company, he had the ability to manage the expectations of the market. He used to go and chat to the stockbrokers, and he was a very good communicator. And he didn't let them down because he was thinking of the big picture, the way the industry was progressing, and how he was going to progress within it. It's a question of communication based on having a very clear strategy.
Ah, that's great. And that's where I wanted to ask you what are the solutions? Obviously, it's an open question. The answer is obviously potentially tailored to each business because each business is
Yeah,
unique. Let's not forget that.
yeah.
So it's not as if, it's a copy and paste situation. However, yes, James, your expertise on this will be extremely welcome. And tell us what's currently being studied, what will be studied in future, what can we expect, and how can the Exponential Blueprint help as well, obviously with all our member subscribers with all the
Yeah.
questions that we would like to get them to ask you effectively. So tell us about this, about what's been going on.
Right. So as you rightly say, there's no one solution. It all depends on the particular business, the aspirations of the founder, the particular challenges of their business. So one of the things we developed as a law firm was what we called the boss, and the principal approach there was to anticipate an exit through a vendor-funded buyout, which is the management team buying the business out of the future cash flow. So that's one way to exit. It's a little understood method, and rightly, business owners think, oh, hang on, I'm going to be paid over 5 years. That's a risk. Well, it is a risk, but then what typically we would advise is you keep a significant proportion of the equity as a minority shareholder. So that's one method. Another method is obviously a trade sale. Another method is a sale to private equity of typically a controlling interest, but it could be a minority interest. But then I think the the method that I think has the most potential for the most ambitious entrepreneurs is going to be having a trading facility on our Asset Match. Now, Asset Match has been trading for a good 12 years now, and it's because it's a challenging communication tool to sell. They've grown modestly. But the great thing now is that the Treasury and the Financial Conduct Authority have promoted this Pisces platform, which is expected to come into operation at the end of this year. Asset Match is applying to become a Pisces operator. I think there will be 4 or 5 different Pisces operators, each of them with a slightly different rule book. My betting is that Asset Match, as they've been doing it for 12 years, are going to be the clear favourite to be the winner. I think there will only be one winner. Um, and I think it can be a great platform for entrepreneurs to take their shares on and to grow.
And that's great to hear. And obviously, we're just going to wait to see the flow of news in the next few weeks and months so that we can inform our audience. I mean, obviously, in the meantime, as I said, the audience will be very keen to understand. I would like to invite all the founders who are watching this video right now, also the investor, please put your comments down, write to us what you like to learn about this because it's such a new world, yeah. So yeah, absolutely, we look forward to this. And question I wanted to ask you was about final consideration. Now, how big can this be? Because I mean, when talking about the UK, obviously we are based in the UK. Uh, Obviously, this is a global issue, employee share scheme. Uh, there's a global potential cultural shift that we could potentially lead, yeah? So first of
Yeah.
all, from the point of view of asset match, what do you think are the consideration to be made about this, this change of culture around business?
Right. So I think the first point to make is that Asset Match will rightly be cautious about admitting onto their platform companies from an overseas jurisdiction. So there are dangers with any market, which is people who are either incompetent or dishonest get onto the market. And if you have a company that is incorporated in the United Kingdom, it is much easier to do your checks on it and you understand the culture better. But certainly over time, I think there is the opportunity for Asset Match to welcome overseas companies onto the market, or indeed to take their methodology and allow other people to use that methodology. I mean, it's an algorithmic methodology for matching buyers and sellers on a periodic basis. So it could be used by others under license, I would have thought, to reflect their own circumstances. So yeah, I think we're in for a time of profound transformational change with AI driving it, and we've got to really think big, all of us. What is the potential if we think big rather than thinking we're constrained? And one of the great advantages I have, having started my career with what was at that time a relatively small law firm. I mean, it was, I don't know, 60 partners, 600 people. And the partners there had the ambition to create the world's first global law firm. And they did some years after I left. And that was a time of profound change with capital markets being unleashed. I think there were a lot of things that were very wrong about what happened. And we saw that crash in 2008. But there's now an opportunity for more profound change, but this time around private markets and quasi-private markets, where there is, as you say, this enormous value. And we mustn't think, oh, these are always going to be small companies. No, these have the potential, as we've seen in Germany. The Mittelstand has driven dramatic change in Germany with export growth. Now we've got to understand why it is the Germans have done so well, and what can we do to replicate that in our country.
Now, that's great. And one of the things that we should be thinking about is obviously the size of the opportunity here. So we're talking to businesses who are not listed on the stock market right now, who are not yet potentially trading. So effectively talking to the 99.8.9% of all the businesses, all those private businesses that effectively they are not listed on the market. Now this opportunity is open to you effectively to access capital markets. And one consideration about productivity. Now we often hear about employees' productivity. Now eventually there are only two reasons why our economy grows. It's about people and productivity. Now,
Yep.
what better way to increase productivity than transforming employees into producer, not just consumer? Yeah, what's your final
Yeah.
consideration on
Yeah.
this?
So you want them to have the mindset of an owner, not an employee.
Mm-hmm.
And provided you can then harness all of that entrepreneurial energy guided by the founder, I think there's phenomenal opportunity to create some amazing companies.
Absolutely, yeah. Now that's great. That's such a great achievement. And I say I personally I'm personally very involved in spreading this message because there is so much gain that can be made, so much more GDP can be created with more productivity. So we came to the end of part three. I would like to thank James for helping us today with this. As ever, I wanted to thank again all of you who keep watching our videos, keep tuning to the YouTube channel. You will see on the right of the screen the opportunity to subscribe to our channel, and on the left to watch the next part, which is going to be part 4, which is going to be really, really exciting because it tells James what we're going to treat in part 4.
Well, then about exciting, Matt, here. It's about tax. What they say, there are
Okay.
only two things certain in life, death and taxes. So we're going to be discussing both of them.
Okay,
But
we're going
but
to make it.
uh,
That's a
with
promise
hope
from
at the
us.
end of with hope at the end of the podcast on where that can take you. So death and taxes, part 4. Don't miss it.
Don't miss it and make sure that that's a promise. We're going to make less tax a lot less unexciting than it normally is. If not exciting, I think that's too much to ask anyway. But anyway, thank you very much to everyone, and we'll see you to the next video, which is part 4. Thank you very much.
Lovely.